What does China's growing presence in Africa mean for the continent's future? Over the past 2 decades, China has invested billions of dollars across African nations, reshaping industries and transforming economies. From building roads and railways to investing in technology and mining, Chinese investments have become a cornerstone of Africa's development story. But as with any large-scale economic venture, opinions are divided. While some praise the opportunities created, others raise concerns about long-term consequences. Chinese investment in Africa has grown significantly, with financial commitments totaling over $155 billion by 2020. The scope of this investment spans various sectors, including infrastructure, energy, telecommunications, and manufacturing. China has financed large-scale projects such as the Standard Gauge Railway in Kenya and the Addis Ababa-Djibouti Railway. Additionally, it has built power plants and invested heavily in Africa's natural resources, particularly in oil and mining. Chinese companies, many of them state-owned, are actively engaged across 52 African countries, making China the continent's largest trading partner and a critical source of financial aid. This extensive investment has transformed key sectors, accelerating economic development across the continent. One of the most visible impacts of Chinese investment in Africa is the transformation of infrastructure. Chinese financing has allowed for the construction of critical infrastructure such as roads, railways, ports, and airports, which are essential for economic growth. The Mombasa-Nairobi Standard Gauge Railway, for example, has improved the transportation of goods, significantly reducing travel times and costs between Kenya's main port and its capital. In addition, China has invested in Africa's power sector, building hydroelectric dams and renewable energy projects. These infrastructure developments have not only spurred trade and industrial activity, but also improved connectivity and integration between African countries, helping to unlock the continent's economic potential. China's investment has been pivotal in driving economic growth and industrialization in Africa. By establishing special economic zones (SEZs) and investing in manufacturing, China has helped countries such as Ethiopia and Nigeria diversify their economies and reduce their reliance on raw material exports. The Ethiopia-Djibouti Railway is a prime example of how Chinese-built infrastructure has supported industrial growth, connecting key manufacturing hubs to international markets. Chinese firms have also set up factories and production facilities in Africa, creating thousands of jobs and boosting local economies. This process of industrialization is essential for sustainable economic development, enabling African countries to add value to their exports and reduce their dependency on volatile commodity prices. Chinese investments in Africa's natural resources have been substantial, particularly in the mining and energy sectors. China's demand for raw material such as oil, copper, and cobalt has driven its investments in resource-rich countries like Angola, Zambia, and the Democratic Republic of Congo. While these investments have generated significant revenue and employment opportunities, they have also sparked concerns. Critics argue that Chinese involvement often focuses on extracting resources rather than developing local industries, leaving African nations dependent on exporting raw materials. Additionally, environmental degradation, particularly from mining operations, and concerns about local community displacement have led to growing opposition in some areas. A controversial aspect of Chinese investment in Africa is the claim of debt trap diplomacy. Critics argue that China intentionally provides loans that are difficult for African countries to repay, forcing them to cede control of critical infrastructure when they default. Zambia, for instance, has faced a growing debt crisis due to large Chinese loans, raising concerns about the possible takeover of its copper mines. However, African leaders and some analysts argue that Chinese loans are often more flexible and come with fewer conditions than those offered by Western financial institutions. While there are risks associated with rising debt, the narrative of a deliberate debt trap oversimplifies a complex issue. Each country's debt sustainability varies, and not all Chinese loans result in financial distress. China's influence extends beyond infrastructure and resources, playing a significant role in advancing Africa's technology sector. Chinese tech companies, particularly Huawei and ZTE, have been instrumental in building telecommunications networks across Africa. Huawei, for example, has developed 4G and 5G networks in countries such as Kenya, South Africa, and Nigeria, greatly improving internet access. These advancements have boosted Africa's digital economy, allowing the growth of e-commerce, fintech, and other digital services. However, China's involvement in Africa's digital infrastructure has also raised concerns, particularly regarding data security and surveillance, as Western countries have warned of potential risks associated with relying on Chinese technology providers. One of the most contentious aspects of Chinese investment in Africa concerns labor practices. Critics argue that Chinese companies often rely heavily on Chinese labor for infrastructure projects, limiting employment opportunities for locals. In countries like Zambia and Kenya, there have been reports of poor working conditions and disputes over wages in Chinese-run operations. However, it's important to note that Chinese companies have also created numerous job opportunities, especially in construction and manufacturing sectors. In some cases, local workers are trained and employed, though the extent of skills transfer and job creation varies depending on the project. The challenge lies in ensuring that Chinese investments prioritize local employment and capacity building. Chinese-funded projects have frequently been associated with environmental and social challenges. Large infrastructure projects, particularly in the mining and energy sectors, have led to deforestation, water pollution, and biodiversity loss in several African countries. For example, mining operations in Zambia and the Democratic Republic of Congo have been criticized for their environmental impact and the displacement of local communities. Additionally, concerns over the long-term sustainability of projects, particularly those that rely on resource extraction, have led to protests and resistance from local populations. Addressing these environmental and social concerns will be crucial to ensuring that Chinese investments are sustainable and beneficial for African communities. China's investment in Africa has also strengthened diplomatic ties between the two regions. Beijing's policy of non-interference and its willingness to invest without imposing strict political conditions have made it an attractive partner for many African governments. In return, African countries have increasingly supported China in international forums, including on controversial issues such as Taiwan and the South China Sea. These growing diplomatic ties are further reinforced by China's participation in Africa-focused summits and its collaboration with the African Union. As Chinese investments continue to expand, the geopolitical influence of China in Africa is likely to grow, positioning it as a key player in shaping Africa's future political landscape. Agriculture is another area where Chinese investment is making a significant impact in Africa. China has supported large-scale agricultural projects across the continent, particularly in countries like Tanzania, Mozambique, and Zimbabwe. These investments have introduced modern farming techniques, improved irrigation systems, and increased crop yields. While these developments have the potential to boost food security and reduce hunger, concerns have been raised about land ownership and the displacement of local farmers. Some critics argue that China's focus on large-scale agribusiness may prioritize exports over local food needs, leading to land grabbing and the exploitation of African agricultural resources for the benefit of Chinese interests. The long-term implications of Chinese investment in Africa are a topic of debate. On one hand, Chinese investments offer African countries the opportunity to modernize their infrastructure, diversify their economies, and enhance their industrial capabilities. This could lead to greater economic independence and a reduced reliance on Western aid. On the other hand, there are concerns that African nations may become overly dependent on China, both financially and politically. Rising debt levels and the dominance of Chinese companies in key sectors could limit Africa's ability to pursue independent economic policies. The future will depend on how African countries manage these relationships and whether they can leverage Chinese investment for sustainable, long-term growth. As China continues to expand its investments in Africa, the future holds both challenges and opportunities. African governments are becoming more strategic in their negotiations with China, seeking to maximize the benefits of Chinese financing while mitigating potential risks. Additionally, there is growing interest in diversifying partnerships beyond China as African nations explore collaborations with other international actors, including the European Union, the United States, and Japan. The key to future success will lie in balancing these relationships and ensuring that Chinese investments contribute to sustainable development and long-term prosperity for the continent. Chinese investment in Africa has brought about significant transformations, from improved infrastructure to economic growth and industrialization. However, it has also sparked debates about labor practices, environmental impacts, and financial dependency. As Africa navigates this evolving relationship, the challenge will be to ensure that the benefits of Chinese investments are balanced against the potential risks. Liked what you saw? Then show it. Hit that like button, share it with your crew, and smash that subscribe so you're always first in line for new content. Trust me, you won't want to miss out